there is no equity at all in the Federal Reserve holding up a $9 trillion balance sheet that is going to have to blow up to 15, 20, 30, 50 trillion dollars when the financial system goes upside down, because they are the lender of last resort. And they're also will be the buyer of only resort for U.S. Treasuries.
You're watching Silver News Daily. Subscribe for more.
Experts worldwide are warning that silver is just getting started, and a massive price surge is right around the corner. Imagine watching the price of silver double, triple, or even more in just a short period. Sounds impossible, right? Well, before you dismiss it, you need to hear what Bill Halter has to say. In today's video, we're breaking down why silver could be on the verge of an unprecedented breakout, and trust me, the reasons might shock you. Stick around because you won't want to miss how this all ties into the biggest opportunity we've seen in years. Let's get into it.
Putting things away that could become projectiles. There really shouldn't be any need for you to have to go to the store or stock up on anything, because you should be stocked up already. As far as these recurring storms, and I've posted on my website for the last 3 or 4 days, there are articles that talk about weather manipulation going all the way back to Vietnam. We know HAARP, H-A-A-R-P, is an absolute fact. I mean, that is, you can find information on that. And HAARP, basically, you're looking at electromagnetic pulses. And I saw a picture someone had taken of North Carolina as the storm was in the Gulf and starting to move north. The whole thing is, and I'm not a scientist, I mean, so, if I'm technically wrong on something, don't blow my email up. But the idea basically is, within the chemtrails, is they've got metal in the chemtrails that can be, if you want to call it, electrified, which causes like a magnetic effect, and it will pull storms in that direction. So what I'm getting at is, these are, in my opinion, and in the United States, I'm still allowed to have my opinion. My opinion is these storms are being directed at areas that are basically red. So I view this as election interference, if you will. And if people die, well, that's just collateral damage in their minds. So maybe I'm wrong, but to me, it just seems pretty odd that you would see a storm that forms off of the Texas, northern Mexico coast that goes directly due east toward Florida, starts out as a tropical depression 2 days ago and is now a Category 5. I don't know. To me, we know for a fact that they can manipulate, if not, control the weather. And I view this as election interference. And I'm sure I'll get all kinds of shit for saying this, but I don't care.
Silver has been frustrating for a lot of investors lately. It's been stuck in a holding pattern, going nowhere for months. But here's the thing. What if this stagnation is just the calm before the storm? You see, silver isn't just a precious metal. It plays a crucial dual role in the global economy. Not only is it a safe haven asset like gold, but it's also vital for industrial uses, from electronics to solar panels. And right now, these two forces are converging in a way we haven't seen in years. Demand is growing stronger every day, but production just isn't keeping up. This mismatch is setting the stage for a massive price breakout. Stick around as we dive deeper into the key factors driving this shift and why silver could be your smartest move right now.
It's all about control. And I just posted, 3 or 4 days ago, a clip of Hillary Clinton saying that if the social media does not or cannot, I forget the word she used. I can't remember the word that she used, but basically, if the social media does not censor, and that's not the word that she used, but that's what she was saying. If the social media does not censor misinformation, that in her words, we will lose all control. And that's what it's about. It's all about control. This is about dividing, conquering. The U.S. is the last bastion. It's the last pothole or bump in the road, if you will, to basically total dominance over the global population. I mean, we already know that basically they've already told us they want to depopulate. And I mean, that's where this is headed.
Now, let's talk about the $32.50 barrier, the key resistance level that's been holding silver back. This price point has been like a brick wall since the market peaked in May. Every time silver approaches it, it gets knocked back down. But here's the twist. Once silver finally breaks to this level, it's going to unleash a flood of upward momentum. Think of it like a dam. Pressure is building, and when it bursts, the surge will be fast and furious. When silver crosses the $32.50 mark with strong trading volume, experts believe it could rapidly spike to $50 an ounce, or even higher. It's like setting off a chain reaction in markets. And with global economic conditions aligning, this breakout seems not only possible but imminent. Stay tuned, because we'll show you exactly why this level is so critical and what could trigger the explosion.
Now, as far as dealers are concerned, I guess the first and biggest red flag is if you ask the question, well, how much is this particular coin? And they give you a runaround and don't give you an answer, then you could be pretty sure that they're not on the up and up. I can tell you, Andy Schuckman and I did a little bit of investigation. This was quite a few years ago. This was probably 2015, 16, something like that. And there's one particular person that does quite a few interviews and is telling people to do the right thing. They're telling people that the pre-1933 gold is absolutely good because they're considered collectibles. They're not bullion, and they'd be almost impossible to confiscate. And with silver, they're saying you should buy junk silver. And I agree with both of those. The only problem is Andy and I, we called that particular company. And this is when gold was trading at maybe $1,200 an ounce, something like that. And we had MS63 St. Gaudens priced at $1,340, $1,350. And we called in, and of course we got the runaround as to not wanting to give us price. But I pushed and I pushed, and I got their price. And their price was over $1,650. And that's because this particular company charges, on top of the retail price, they charge 26%. But people don't know that until after they send money, and then they find out. And I've had some people ask me about it, and they've immediately called and said, I want to cancel the trade. And the trades have been canceled. But to me, I mean, the retail price is more than adequate for, dealers to do business, earn a fair profit, versus this particular company coming up with the retail price. So they're already getting paid on that. And then they bang you for 26%. So, yeah, I mean, I would say that is probably the number one red flag. is if they don't want to give you prices.
Let's zoom out and look at the bigger picture. What's happening around the world that's driving silver to the edge of a breakout? First, inflation is running rampant, and central banks are printing money at unprecedented levels. Every time this happens, the value of paper money drops, and people rush to hard assets like silver. But that's just the beginning. Global geopolitical tensions are rising, and when uncertainty hits, investors flee as safe havens. Gold is already seeing massive gains, and silver, which often follows gold, is next in line. And don't forget about the weakening US dollar. As the dollar loses value, silver becomes more attractive to international investors, boosting demand even further. Combine this with looming interest rate cuts from the Federal Reserve, and you have the perfect setup for a massive silver rally. It's like a financial storm brewing. Everything from inflation to global unrest is funneling demand into silver, and it's only a matter of time before the price surges. Keep watching, as next, we'll break down a unique tool Bill Halter uses to predict silver's next big move.
One in particular, and it doesn't necessarily have to be with an IRA. It could be just an outside trade that you're planning to vault. You always want to have, in an IRA, you need to have a trustee and you need to have a custodian. The trustee basically does your bookwork for you, and the custodian holds your metal. And you also need to have a dealer because you need to buy the metal. You don't want all three of those to be the same entity. You don't want to go to company XYZ who says, okay, we'll buy you X amount of gold or X amount of silver. It'll be accounted for by our trustee and we'll hold it in our vault. The danger there is your metal never ever got bought. They took your money and they're sending you statements. I mean, this happened back in a big way back in, I think it was 2000, I want to say 5 or 6, something like that. And I forget who it was. I think it was Payne Weber. And it was mega millions of dollars that they had, that they were storing for years and years, and they never bought the metal. And they admitted to it. They paid a fine. There was no prosecution or anything. They made everybody whole, but they made everybody whole because that's a company that stayed in business. If a company doesn't stay in business, that does something like that, you're out of luck for everything. You're going to lose it all. So you want to have a separate precious metals broker, a separate trustee, and a separate vault. Now, outside of an IRA, there's a lot of companies that act as the precious metals broker and the vault. You don't want to do that, again, because you got nobody looking over anybody else's shoulder. I mean, in the instance of the IRA, you've got 3 separate entities, and each entity is watching the other entity. If your dealer says, we sent the metal, and the vault says we didn't get it, well, there's a problem. But if it's the same company, you're never going to hear that. You're never going to know that. And the metal was never bought and you never owned it. So that's probably, to me, that's the biggest danger. That's the biggest scam.
Now, here's where things get really interesting. Bill Halter uses a unique tool called the Synthetic Silver Price Index. And this index could be the key to understanding why silver is about to explode. It's not just about silver itself. It combines the prices of gold and copper to give a more comprehensive view of where silver is heading. You might be wondering, why copper? Well, copper's performance plays a crucial role in silver's movement, and it often mirrors silver's price trends more closely than you'd expect. The index has been stuck below a key resistance zone between 2,560 and 2,640. But here's the kicker. Once it breaks through, it could signal that silver is primed for a massive breakout. This index is like a hidden roadmap to silver's future, showing patterns and signals that traditional analysis might miss. And the signs right now are pointing to a breakthrough. Stick with us because we're just getting to the good part. Next, we'll dive into how industrial demand is creating unstoppable momentum for silver.
Yeah, I'll start with the IRA question on storage. In my opinion, these vaults, what's going to happen when the system goes down, they're just going to close their doors. There's not going to be anything in and nothing out. You won't have access to your metal, but that's the same time you don't have access to your bank account. You don't have access to credit cards. Nothing's working. So obviously you want to have metal on hand. And the question in an IRA is, do you take it all out, have it delivered to you, and, take the tax hit plus maybe a 10% penalty? I don't really think that's necessary. The great taking, I think, is going to be largely, if not almost entirely, digital. I think it will be digital from the standpoint of your bank accounts, your brokerage accounts, your insurance, annuities, things like that. And I think longer term, real estate's going to be taken because people aren't going to be able to pay their real estate taxes. So I think that's the bulk of the great taking. I don't think that they will go into, crash into vaults and confiscate, because they've got to physically do that. They can't do that with a push of a button. If you do hold IRAs, and I've recommended this now for years, you want to have U.S. Mint lineage coin. You want gold eagles. You want silver eagles. And the reason being, if you're buying a gold eagle this week or a silver eagle this week from the mint, can they really come back next week and say, but you've got to turn around and sell it back to us? I think there'd be all kinds of lawsuits. I think within an IRA account, could they say gold and silver, or gold or silver are illegal? Yeah, they could do that. And if you own bars, if you own generic coin, those would certainly be subject to it, because it's basically raw and privately fabricated metal. Could they confiscate foreign sovereigns? Yeah, they could. Could they confiscate American coin? Yes, they can, but it will be much, much more difficult because it is U.S. coin. So I would just say, if you hold an IRA and you decide that you do want to leave it in a vault, make sure that they're U.S. Mint lineage coin.
Silver isn't just a safe haven asset. It's also critical to many industries, and that's where its real power lies. From the smartphones in our pockets to solar panels powering our homes, silver is at the heart of some of the most essential technologies today. And here's the kicker. Demand from these industries is skyrocketing. Solar energy alone is driving up the need for silver as nations push for cleaner energy solutions, and there's no slowing down. In fact, the silver used in industrial applications is expected to outpace supply for years to come. But the problem is, the world isn't producing enough silver to meet this growing demand. Mining output is declining, and the silver market has been in a deficit for years. Every year, we're using more silver than we're mining, and that gap is getting wider. This industrial demand is like gasoline being poured on the fire. Once silver starts rising, it'll be hard to stop. Up next, we'll talk about how silver mining struggles are making this situation even more urgent.
Well, there's no reason, unless you're a collector, there's no reason to have proof coins, unless you want a proof coin of every year that goes back to 1986. But if you're putting in $500,000 or $1 million or even $100,000, what is the point of paying 50%, 75%, 100%, whatever it is, more for a proof coin? Because you're not going to get that back on the back end. Just buy current U.S. Mint lineage bullion. Gold eagles, silver eagles. And if it's outside of an IRA for silver, hands down, 100% of the time, right now, you want to own junk. You don't want to own any other form of silver, simply because Junk silver is the dimes are the smallest denomination of silver you can get. It's readily recognizable. It's U.S. mint lineage. It cannot be counterfeited because all those coins were in people's pockets. They have to show where. If somebody shows you a silver dime or silver quarter that's absolutely shiny and looks perfect, it's probably not real. But I mean, I've not heard of anybody trying to counterfeit a dime or a quarter because it doesn't make sense. Silver's too cheap to do it. But I mean, it fits and checks all the boxes for the reason you want to own silver right now, or junk silver right now, because it will be the best form of barter. And on top of that, it's about the cheapest silver you can buy right now. And a year ago, it was $11 over spot. Now it's like what? $2.50 over spot. And that's the same price you're going to pay for a generic, a Buffalo or whatever that came from XYZ Mint or a bar. And obviously bars, think about bars. In a system breakdown, would you accept a bar for someone not being able to test it? You don't know if it's real or not. And bars are the easiest thing there is to counterfeit. So it makes zero sense in silver unless it's an IRA. And as long as you're an American, it makes no sense to buy anything other than junk silver. That's pre-1964, pre-1965 dimes and quarters. They're 90% silver.
Here's where the situation gets even more concerning. Silver supply is falling and fast. You'd think that with prices expected to rise, silver mining companies would be ramping up production. Right, but here's the reality. Global silver production has been declining for years. Why? Because around 72% of silver is mined as a byproduct of other metals like gold, lead, and zinc. That means, unless those primary metals surge in price, mining companies aren't motivated to increase silver output. Even when silver prices go up, these miners aren't rushing to dig up more silver. This creates a serious bottleneck. And it gets worse. Many of the pure silver mines are struggling. Years of underinvestment have left them with dwindling resources, and the silver content in the ore they extract has dropped by over 20% in the last decade alone. With fewer new mining projects in the pipeline and ore yields falling, the silver supply crunch is only getting tighter. This lack of new silver production, combined with skyrocketing demand, is setting the stage for a price explosion. But we're not done yet. Next, we'll explore how the historical relationship between gold and silver is making silver even more undervalued than you think.
I believe there is some type of connection to the state of Texas. So that does give you, it gives you some oversight to the vault. I've had, I don't know, maybe 24 clients vault there, and I've not heard of any problems at all. So I would say, I think it's probably a fine vault. I will say, I also came across a guy, and it's happened a couple times, but I came across a guy who had $1.6 million worth of metal stored at a vault. And he told me his annual storage fee was $250 a year. And I asked him, I said, do you think there's any insurance company anywhere in the world that would insure $1.6 million for a $250 premium? And it did wake his eyes up, and he did withdraw some of it, and he did get his metal, but understand that could have been someone else's metal. I mean, there's no telling what's going on in that situation. But if something seems like it's free or too good to be true, every single time it's going to be too good to be true.
Let's take a step back and look at one of the most telling indicators of silver's future potential, the gold to silver ratio. Historically, This ratio has been a reliable way to gauge how silver is performing compared to gold. Right now, that ratio is signaling that silver is deeply undervalued. Historically, the gold to silver ratio has averaged around 50:1, meaning it took 50 ounces of silver to equal the value of 1 ounce of gold. But today, that ratio sits closer to 84:1. This massive gap is a clear signal that silver is undervalued in comparison to gold. So what happens when this ratio corrects itself? If the ratio moves back to its historical average without any increase in gold prices, silver could be valued at around $50 per ounce. But if gold continues its upward trend, which many experts believe it will, silver could go even higher. This historical comparison isn't just a number. It's a signal that silver has massive room to grow. But we're not done yet. Up next, we'll talk about how inflation-adjusted peaks show that silver's real value could be even higher than you think.
Yes, silver is just silver. If you're an industrial user, you're gonna, dump it in the machine, melt it down, and then turn it into whatever you're manufacturing, or you're gonna turn it into solar panels or whatever. But on the street, it does make a difference. Like I said, if somebody, and you and I are brokers, if somebody comes to you after this hurricane and says, I see you've got an extra wheelbarrow or whatever, I'll give you this silver bar for it. Are you going to take it? Can you test it? I mean, maybe you can. Maybe you've got the stuff to do it. I can't because why bother? I just wouldn't accept the bar because I'm not going to be able to offload a bar. You got to have something that's recognizable. And if you drop a dime or a quarter on a countertop versus a current dime or quarter, you could tell the difference. If you flip it on its edge, you could tell the difference. You could verify a dime or quarter that it's authentic with your own eyes and your own ears. Bars, you can't. Bars can be counterfeited. Buffaloes can be counterfeited. When I say buffaloes, I'm talking generic coin. And then what's the sense of buying a Maple Leaf or a Krugerrand or Philharmonic or Kangaroo or any of those sovereign coins? They actually cost more than junk does right now. Now, when all is said and done, junk, in my opinion, is going to be priced even higher than silver eagles, just because of the utility. And people will find out during bad times when they have to barter that the most sought after form of silver will be junk silver. And I mean, I just tell people, and I've done a lot of swaps in the last 6 months, 9 months. I've done a lot of swaps from bars, generics, sovereigns into junk. Once people go through bartering, they're going to understand what the best form is. And if you go in cheap to begin with, you're going to come out cheap later. I mean, if you bought bars because they were the cheapest form, like 100-ounce bars, you're going to come out the cheapest. And there is zero utility to a 100-ounce bar. I bought 3 100-ounce bars in my life. And I did that in 1991. I paid $375 per bar. And the reason I bought the bars was because they were Hunt Brother bars.
If you think silver $1.50 sounds impressive, wait until you see what its inflation-adjusted price reveals. Let's take a look at the historical peaks. During the Hunt Brothers silver squeeze in 1980, silver hit an inflation-adjusted high of $143 per ounce. In the 2011 bull market, driven by quantitative easing, it surged to an inflation-adjusted $1.68. Compare that to today, where silver is trading at just around $31.60. This means that, even without factoring in current economic pressures, silver is massively undervalued by historical standards. So what does this tell us? It shows that silver has significant room to rise. It's going to catch up with its past peaks. And with today's inflation levels, The case for silver hitting these numbers again is stronger than ever. Imagine the potential gains as silver chases these inflation-adjusted highs. But we're not finished yet. Next, we'll dive into how the global silver shortage, combined with China's export restrictions, could send silver prices soaring even faster than expected.
In today's world, and not in all locations, but let me just say in the urban areas, neighbors are gonna pick clean other neighbors that have fallen just like vultures. Now, you do have some good people out there. Look what's going on in North Carolina. You have people trying to help left and right. And what's going on? They're being hindered. They're being hindered. And you've even got local sheriffs now saying, we're going to arrest federal workers if they get in the way. If you're not going to help, don't get in the way. Don't be part of the problem. Just get out of the way. So the other thing from the Great Depression, we didn't have a government that was broke. We didn't have a government that was bankrupt. At this point in time, we have a treasury that's spending over $1 trillion interest per year, and we have a Federal Reserve that all you have to do is look at their numbers. Their balance sheet is now upside down. I mean, they're losing money on a weekly basis because interest rates have gone up, and they've lost. They had, I think the number I saw was they had 65 billion of equity holding up $9 trillion of assets. But now, because interest rates have gone up, the bond portfolios have dropped $250 billion. So that 65 billion is gone. So you have nothing. There is no equity at all in the Federal Reserve holding up a $9 trillion balance sheet that is going to have to blow up to 15, 20, 30, 50 trillion dollars when the financial system goes upside down, because they are the lender of last resort. And they're also will be the buyer of only resort for U.S. Treasuries.
Now, here's the kicker that could push silver prices even higher. There's a global silver shortage on the horizon, and it's only getting worse. For the past few years, demand for silver has far outpaced production. We've been using more silver than we can mine, and stockpiles are running dangerously low. But it's not just a matter of low production. China, the second largest silver producer, has recently implemented export restrictions, limiting the amount of silver flowing into the global market. This means that just as demand is skyrocketing, supply is tightening up even further. What happens when there's not enough silver to meet the growing industrial and investment demand? Prices could spike dramatically, and with major economies pushing toward green energy initiatives, which rely heavily on silver, this shortage could hit much sooner than anyone expects. We're talking about a perfect storm. Rising demand, falling supply, and restricted exports, all leading to one inevitable outcome, a major price surge. But before we conclude, let's bring everything together and dive into exactly how Bill Halter predicts silver could hit $50 and beyond.
In interest alone. And that is well more now than what we pay or spend each year for the military. And our military spends more than all the militaries combined for the rest of the world. So our interest expense it's as far as compared to receipts, what's the number now? 25%, 30%? We're at the point where mathematically we are going to default. There is, I've said this before, the only possibility of the math being wrong or the math being repaired would be the second coming of Jesus Christ. And that's not Donald Trump. I mean, the alternative, and let me say something. First off, I'm still not sure there's going to be an election. I think every day that goes by, more and more things happen that rate or lower the odds that we're even going to have an election. Who knows? But in my opinion, if Harris gets in, the Republic is completely over, and it will collapse with no rule of law. It'll collapse with their rule of law. If Donald Trump wins, the collapse is still going to come, but we will go down under the Constitution, and the rule of law will still prevail. Now, as far as, is there anything that can be done? The answer is a flat no. It's already been done. This cake is baked. It's on fire. You need a fire extinguisher for this thing. There is no way out. And let me just add this from a human standpoint. While the Great Depression was horrible, a lot of people lost everything. From a society standpoint, it was a much better society. You had neighbors that were willing to help neighbors.
So, how does it all come together? Bill Halter's expert analysis points to one unavoidable conclusion. Silver is poised for a massive breakout, and all the signs are pointing to it happening sooner rather than later. We've talked about industrial demand surging, supply falling, and global economic instability driving investors towards safe haven assets. But it's the combination of these factors that makes silver such a unique opportunity right now. Once silver breaks through the $32.50 resistance level, it's likely to run up to $50 per ounce, and that's just the beginning. Remember, silver's historical peaks and inflation-adjusted values suggest that $50 is a conservative target. As inflation continues to rise, and with the looming silver shortages, we could see silver go much higher. Some experts believe it could even reach several $100s per ounce in the long term. But here's the critical takeaway. You don't want to wait until this happens. The window of opportunity is closing fast, and if you're not positioned in silver now, you could miss out on one of the biggest market surges in years. So what do you think? Are you ready to secure your place before silver's next big move? And before you go, don't forget to hit that subscribe button for more insights like these. Stay ahead of the curve and protect your investments. Of course, this isn't financial advice. Always do your own research before making investment decisions. Thanks for watching, and we'll see you in the next one.
The reason an ounce of gold that was minted 100 years ago is still that same ounce of gold. It hasn't gotten bigger. It hasn't gotten smaller. It's still just an ounce of gold. If you bought, name umpteen different currencies 100 years ago, and you actually, you got the paper for it, you have the paper, whatever they are, those currencies, there's been a lot of currencies that have gone to zero, don't exist anymore, and that's simply, a collectible item if it's in perfect shape. Confederate dollars, there's an example. It's still just a Confederate dollar. It was a Confederate dollar then. It's still a Confederate dollar now, but it has no value. The whole idea, when I say gold is an ounce of gold today was an ounce of gold 100 years ago, the point I'm trying to make is it can never, ever go bankrupt. It can never, ever default. Every currency on the planet is fiat. Every fiat currency is backed by debt. Now, are there nations that are going to go belly up, go bankrupt? Yeah, absolutely. An ounce of gold it used to be that currency, because currencies were derivatives of gold. Think about the names: the peso, the pound.
The pound sterling, specifically.
Yeah, the pound sterling. Right. The lira, all of the peseta, all of these currencies, their names invoke weight. In other words, how much it actually weighs. All of these currencies, every currency, with the exception of the euro, I believe, all currencies were derivatives of gold. And they were priced in gold. And what's happened is the governments have tried to demonetize gold. And what they've done is now they're pricing gold in the currencies. So, yeah, the price of gold goes up and down in dollars. It goes up and down in euros and yen and pounds. But it doesn't move. What goes up and down is the currency. When you see gold going up $100 an ounce, 200, 500, 1,000, whatever, all that is a function of the value of the dollar declining. The dollar is losing purchasing power. It's losing value versus the standard, and the standard is gold. Gold is the bedrock. It does not change. It's the currencies that change.